Anurag, the details around the stake are a little bit vague right now, but what do you think, or what kind of changes are you expecting from Elliott?
I think the first focus, and we've already seen that Salesforce, go down this route, is to be a far more profitable company than it is. Looking for margin expansion, not spending as much on sales and marketing as it has done over the past, you could say, decade. So that could be one area of focus. The second area could be buybacks. This company has been spending a lot on acquisitions over the last few years. We could see some discipline there, no large deal, perhaps only some tuck-ins, and then complemented with that, all they generate a lot of free cash flow, $6 to $7 billion, and we expect buybacks to be a big story there.
Now, in terms of the environment we're in right now, the ability of this company to make changes as the macro headwinds are raging, Anurag, I mean, what are going to be some of the things that Salesforce has to navigate while they're, on the one hand, perhaps addressing investor concerns, but also trying to deal with the realities on the top line right now?
No, I think it's a very good point that you brought up. But, frankly speaking, software is a very different world today than it has been in the last 15, 20 years. This is a subscription-based model. Unless you see massive layoffs globally, they will generate a good amount of revenue. They will generate a good amount of free cash flow. The one area which will be weak will be top-line acceleration. You will see growth decelerate. But frankly, it's not going to get into negative territory because of the subscription nature of the software they sell. So from a free cash flow point of view, it's okay. But we do need to see changes on the top in terms of executives, because we saw a bunch of them leave. So is there an execution risk? Perhaps, but far more stable business model than it has been in the past.
Anurag, let's talk very quickly in our last 30 seconds here about the stock itself. We're looking at about a 156 share price, up about 3% on the day. How high could this share move?
I mean, that's a very tough thing to say. It depends on interest rates, frankly, and the growth rates. But, if you see right now, it's trading, I think, 35% below its pre-pandemic average. So there's a big gap between its long-term historic valuation versus today. But they really need to show both cost savings as well as accelerated revenue growth in order to get there.